China releases key economic data this week on trade and consumer prices. We'll discuss the country's economic recovery and what it means for the global economy. Hello, I'm Anand Naidu and this is The Heat. China's economy expanded over 6% in the second quarter this year, according to the National Bureau of Statistics. It grew 5.5% in the first half of the year, above the government's target of around 5% for 2023. In another sign of China's economic recovery, the Purchasing Managers' Index for the manufacturing sector, that's a key measure of China's factory activity, came in at 49.3%, an increase from May and June. The Chinese government has issued several policy and support measures to boost confidence, ensure a sustained recovery and promote high-quality development. Well, for more now on China's economy and beyond, let's bring in our panel. Joining us from London is Klisman Murati. He's the founder of Pareto Economics, a global affairs research consultancy, and the creator of the Global Power Index. From Arlington, Virginia, Arthur Dong is a professor with the McDonough School of Business at Georgetown University. Also with us from Hong Kong, Edward Say is the founder and CEO of Gaofeng Advisory Company. And Xu Xiang is the assistant director of the International Monetary Institute in Beijing. Thank you, everyone, for being with us. Xu Xiang, China's National Development and Reform Commission has released a 20-point plan. They released that plan last week, and the plan is meant to spur consumer spending. What can you tell us about this plan and how it will help with China's economic recovery?
Well, it's actually a very detailed plan concerning every aspect in the people's daily life and also enterprises. So, for example, tax rebate and also the stimulus coupon for the household, and also there have very favorable conditions for the loans to borrow by the SMEs and also the personnel shops and etc. So I think this has already been very thorough. I think recently, if you take a look at the numbers in the hospitality industry, tourism, you will find out the market has been overheating recently. It's very hard to book a seat in the restaurant. And if you go anywhere in the resort of the tourism, you'll find it's very, very hot and it's always long queue. So I have no doubt there's already been seen a very strong effect in this kind of sector. But for the manufacturing, for the export, still they will be affected by many factors, especially outside of China. So we will still wait to see how it's going to act out in the coming days.
Edward, China's economy expanded 6.3% in the second quarter. In June, the World Bank really raised its China growth forecast to 5.6%. Now, based on the economic data that was released this week, what are your expectations for the Chinese economy, and what would you be looking for in the second half of the year?
Yeah, the first half economic performance in China is actually not too bad, around 5.5% and so on in general. So for an overall target of around 5% for the entire year, so that means China have to make to roughly about 4.5% roughly to make the target. So I think in general, the probability of China making that number is pretty high actually. Just remember that one of the factors in the GDP calculation is the US dollar and the renminbi exchange rate. And in the first half, actually, the renminbi was relatively weak versus the US. And if there's any upward adjustment in the exchange rate, I think getting another 0.5% plus for the Chinese GDP growth won't be a big major problem. But on the ground, you know, as we are looking at what's going on in China, because I do work intensively on China and talk to entrepreneurs and people, I think in general, there is a sort of wait and see atmosphere. People are waiting for the impact of the policies that you mentioned in the first question. And people are waiting for sort of what will be really happening. So there's a lot of questions and hesitation at this moment. But I think as the policy begin to take effect, I think people will come along. So in general, my level of confidence of China reaching around 5% this year is pretty high.
Klisman, let's talk about the situation in the United Kingdom. Inflation in the UK remains the highest in all developed countries. It's about 7.9%. But on Friday, the Office of National Statistics said the UK beat expectations with 0.2% growth in the second quarter. And the finance minister in the United Kingdom, Jeremy Hunt, he says the Bank of England is forecasting the country will avoid a recession. What are your thoughts on this? What is your assessment?
Yeah, it's really interesting times in the UK because we have both the Bank of England and the government wanting to put on positive numbers and working towards a common aim of making sure the UK goes into a soft landing. We see, for example, the fact that interest rates again have been risen in the UK because they're trying to stave off inflation, and I think this is working. So I think the UK is going in the right direction in that regard. Also, Rishi Sunak, the Prime Minister, obviously has an election coming up next year, and he's trying his best, along with his cabinet, to make sure that across all fields, the UK is moving in the right direction. And although we've had macro impacts impacting the UK and also domestic political risk, I suppose you say, impacting the UK, I think over the long run, and I say this over the next 2 years or so, I think we'll see a stabilized situation developing in the UK. It's got fantastic relations again with its neighbours post-Brexit, and it is trying its best to continue to carve out an identity for itself as Global Britain. And we are seeing numbers, hopefully, in the coming months support that compounding over the long run.
Arthur Dong, here in the United States, we had some figures out last week, earlier this week actually. Inflation in the United States rose 3.2%, but it remains below the high that we saw that last year's peak of over 9%. And the Federal Reserve here has raised interest rates 11 times since March of 2022. Do you believe the Fed has now got a handle on inflation?
Yes, Anand. If you take a look at the numbers, they've been very encouraging here in the United States, as the most recent inflation figures come in at about 3.2 on overall inflation, and core inflation only raised 0.2%, meaning that these inflation numbers are all heading in the right direction so far as the United States economy is concerned. And financial markets, Wall Street is certainly reflecting this, as they believe also that the Fed might be finally reaching an endpoint with regard to its interest rate increases.
They're still not close to the 2% target, though.
Yes, that's the target number, but the trend line is certainly encouraging that they're all heading in the right direction. The one big challenge that the United States is still facing is increased labor costs. And so those are numbers that the Fed are watching very carefully as labor contracts all are escalating as labor is becoming, in a sense, stronger with regard to their salary demands here in the United States as a reflection of labor shortages across various industries.
Arthur, do you think the United States is going to be able to avoid a recession?
Sentiment seems that we're headed for a soft landing, although, if you talk to some Wall Street economists, they are forecasting a more, let's say, robust recession as earnings reports start to come in, and some of them are missing missing their targets as a result of declining earnings overseas. But there is a consensus building amongst Wall Street analysts right now that the United States is headed for a soft landing. We are in the United States at full employment at this point, and you can't have a hard landing if people still have jobs.
Xu Xiang, getting back to China, as I said at the beginning of the show in the introduction, the Purchasing Managers Index for Chinese manufacturing, which is a key measure of factory activity in China, it's at 49.3% in July. That's, as we pointed out, it's going up from May and June. That's up for a second straight month. What does this tell us?
It tells us inside of China, actually, the manufacturing sector is stably recovering, despite we have so many overlapping uncertainties outside China. So it means the double or dual circulation model actually has been working right now in China. If you take a look at the daily spendings, if you take a look at the people's daily economic activities, you will find that the evidence is ample and sufficient. But as I still mentioned, the only uncertainty here, which is a big ghost in the closet, is the real estate market. Many cities has already been stabilized, but also in smaller cities, we will still wait to see how the policies are going to act out, and we can stabilize the major market. But other than that, I think all pictures look fine by far.
And Xu Xiang, Edward was telling us a moment ago about the impact that the exchange rate could have, that the yuan-dollar exchange rate could have on growth in China. What are your thoughts on that?
Well, I think currently we have already seen the stabilizing signs in exchange rate market. One, I think, most important factor is, beyond China is Federal Reserve. We have already seen that Wall Street has already locked in that Federal Reserve would not have another interest rate hike, or at least a major interest rate hike. So for the dollar indexes, I think it's already been stabilized. And also, by far, I think Chinese fundamentals has already been stabilized as well. If I take a look at the PPI, if I take a look at the PMI, as well as the GDP growth rate in Q2 and potentially in the Q3. So I think the whole market expectation is there around 7 or around 7.1. Or can it even be a little bit improved as by the end of the year when the Federal Reserve stopped their interest rate hike? So maybe around 6.9. I think that can be a reasonable range.
Klisman, China's foreign trade grew steadily in the 7 months this year, but exports were down in July. That's amid falling global demand. But China by far remains the largest supplier of goods to the European Union. It exports things from telephones to computers to rare earth minerals. We've seen that. What is your assessment of how this trade, this economic relationship is evolving?
Look, it's clear that both the EU and China, being stalwarts in the international trade sphere, need each other to grow. But the issue lies in the ideologies in which they both have and which direction they want to take the world into. The EU, again, isn't one homogeneous entity, made up of 26 countries, and also the bureaucracy of the EU, which has its own sort of leanings and its own thoughts on how things are developing. And also within that, there are fractious opinions. So trying to have a whole 26 countries agree on one direction towards a country like China, and also for trying to engage holistically with 26 nations plus the EU is very difficult. And there's different opinions from both Ursula von der Leyen, for example, and other people within the EU as it relates to their development with China. But it's clear that the EU has a perspective, holistically at least, that it sees China as both a competitor and also a country which it needs to work with. Because China is the only buyer in town when it comes time to major exports. And the EU for the longest time has been trying to open up Chinese markets so that businesses in the EU can export into China. And they found this process very, very difficult. So for both of these economies to grow and to work in tandem with each other, I think there needs to be more agreement and more cooperation between both partners so that trust can continually be built, so that they both benefit from this very changing world order that we see happening today and into the future.
Edward, if we look at Europe's biggest economy, Germany, now there's a number of German companies that have expanded their presence in China. BASF recently formed a joint venture with a Chinese wind turbine company, and Volkswagen announced a $700 million investment in the electric car manufacturer XPeng. What makes China so appealing for these companies?
China is indeed very appealing for many foreign companies, including German companies. Why is China so attractive? Of course, people talk about China's size, China's growth, and so on. But what's becoming even more important is that China is becoming the epicenter for innovation across the board. You talk about Volkswagen. In the auto industry, China is really leading the electrification revolution, and there's a lot of innovation that's going on in China, and leading German car makers, and for the matter, American car makers and other foreign car makers are now finding that you have to be in China in order to really pick up the innovation in tandem with the Chinese players. So you see this kind of moves. For someone like BASF, they play in the value chain that serves a lot of the end users in this kind of areas where innovation is happening, and therefore there's a lot of new demand, but also there's a lot of new innovation across and along the entire value chain that BASF has to be involved. So you're seeing this phenomenon.
Arthur Dong, right now China ranks first in the world for automobile exports. It surpasses Japan. China exported some 457,000 units of new energy vehicles from January to May this year. And the Chinese company BYD rolled out its 5 millionth new energy vehicle recently. But question is, what is the likelihood of the US market opening up to this?
In time, I believe that some Chinese car brands and manufacturers will have a presence here in the United States. But the U.S. market, automotive market, is highly regulated, and the cost of entering this marketplace is quite high. So, and it's a highly competitive marketplace with more brands represented in the United States than other parts of the world. And so for Chinese companies to enter the U.S. market, they're going to have to come into this market with lower priced vehicles, as well as build out a robust dealership network, and also comply with all the safety standards that are requirements that are built into the regulatory standards for U.S. Cars sold in the United States. But I think over time, yeah, these Chinese vehicle manufacturers who are really good, as our commentator indicated, very good at both autonomous driving as well as affordable EV cars. I believe in time there may be a marketplace, so long as sort of the current trade frictions in some way are sort of overcome.
But Arthur, in many respects, the United States has to play catch up, isn't it? Because the infrastructure that's needed for this to succeed is not really in place yet.
Well, the electricity charging stations is the next great opportunity in the United States. 40,000 or more EV charging stations will have to replace petrol stations. And it's a huge opportunity, and President Biden has thrown a lot of money into this arena. So I dare say in the next 2 or 3 years, you're going to see some major sort of developments in the EV charging field for both cars and trucks.
Xu Xiang, I want to talk about another part of the Chinese economy right now, a very important part of the economy, a big driver of GDP growth, and that's the real estate market. In fact, it's responsible for up to 30% of China's GDP growth. But there have been challenges in recent years. In fact, in July 2022, there was a government initiative to ensure the timely delivery of pre-sale housing that was launched at that time. How has that impacted the market now?
Well, I think the government has already realized the real estate market is a double-edged sword. On one hand, it's still a very important pillar of the national economy. On the other hand, it can trigger some economic risks if it cannot handle it very safely and delicately. And we issue several policies currently, and I think we have already seen the effect. If you take a look at the sales numbers and the price numbers in major cities in China, I think it's stabilized in Beijing and Shanghai, and it's going a little bit further up than before, than 3 or 4 months ago. But I think the problem is in the 4th-tier city or 5th-tier cities in China as whole. I think Chinese financial market has already locked in all this kind of the risks, and already we have seen the fundamentals has been stabilizing. And according to America's experiences, I think eventually we're going to repair the systematic risks inside of the real estate market. And also, I think in America, even though the financial market has already been very mature with the very huge stock market, but still in America and in Europe, real estate market can be a very important pillar still in their national economy. So I think China in the future is probably going to follow similar paths, still make sure that the property market can develop in a healthy way.
Edward, China is not just a manufacturing hub. As you pointed out earlier on, it's increasingly becoming a center for innovation. And China says it wants to have high-quality growth. And President Xi Jinping defines that as a, quote, shift from pursuing growth to pursuing better growth. Explain that to us, and how does investment in science and technology contribute to China reaching its goals?
Right. Shifting from just growth to high quality growth is the main idea now, and that's a priority for the entire Chinese government. What is that at the very beginning of the economic reform, China relied primarily on its growth at that time through labor-intensive industries. And it's not only about labor-intensive. Actually, around that time, many factories have to, sacrifice the environmental conditions in order to produce goods and at a price that is acceptable for the foreign customers. So that was a period where it was high growth for China, but it was actually pretty tough for China because it really not enhancing all the elements in the society. In fact, in some elements like environment, it went backwards. With the evolution of the Chinese economy, China has intentionally tried to migrate from this kind of high labor-intensive, high environmental, unfriendly industries into higher quality industry, meaning focusing on innovation, technology innovation, so that China can really provide more value added to itself and also the rest of the world. So from that standpoint, the engineering and also scientific personnel is the key and the core to that kind of development.
Arthur, if we thought that everything was sailing smoothly, sometimes it isn't. This week, President Biden imposed restrictions on U.S. investments in some Chinese sectors, some Chinese high-tech firms, for what he says are national security concerns. But others say that this is just the latest in a series of efforts to put the brakes on China's rise as a major economic power. Let's watch this report by our reporter, Jim Spellman.
The new executive order will limit the ability of U.S. venture capital firms and private equity companies to invest in parts of China's high-tech sector, including AI, advanced semiconductors, and quantum computing. The Biden administration cites national security concerns as the reason behind the new restrictions. China's Ministry of Foreign Affairs objects, saying in part, China is strongly dissatisfied with and firmly opposed to the U.S.'s insistence on introducing restrictions on investment in China and has lodged stern representations with the U.S. side. Under the guise of national security, the United States restricts American companies' investment in China and engages in pan-security and pan-politicization. Its real purpose is to deprive China of its right to develop and safeguard its own hegemony and self-interest. This is naked economic coercion and technological bullying. In a trip to China last month, the U.S. Treasury Secretary tried to downplay the impact of the investment restrictions.
It would be highly targeted and clearly directed narrowly at a few sectors where we have specific national security concerns. I want to allay their fears that we would do something that would have broad-based impacts on the Chinese economy. That's not the case. That's not the intention.
Some analysts see the new restrictions as the latest move in a larger effort by the U.S. to hold back China's economic development and give American firms an unfair advantage. The executive order was announced the same day Biden was touting the U.S. semiconductor industry.
All over the country, semiconductor companies are investing in record billions of dollars. By the way, you know how much has been committed in the Chips and Science Act to be invested in America? $230 billion.
U.S. venture capital investment in China has already plummeted in recent years, and some investors warn this could be a, quote, major blow to Chinese tech startups and U.S. venture capital firms. But analysts note that similar measures taken in the past have failed to stop China's development.
History has shown that these measures have all failed. It's not going to stop China from developing these technologies. I mean, China has its own history of being sanctioned by other countries in technology, but the outcome is exact contrary.
The executive order must now go through a 45-day public comment period. Many U.S. companies are expected to push for exemptions and modifications to the new restrictions. Jim Spellman, CGTN, Washington.
So, Arthur, how does one explain these seemingly contradictory policies on the part of the Biden administration? You know, one week we hear from the administration that it wants to improve relations with China, and then we get something like this.
It actually does seem contradictory, and however unpleasant the latest statements were from President Biden, it's actually very consistent with a change in focus of U.S. trade policy vis-a-vis China. In the earlier era, it was all conditioned on economic gain and mutual gain. Today, trade policy vis-a-vis Washington and Beijing is conditioned first and premised first on national security, and secondly by economic opportunity and gain. And so I would say it's more consistent with the Washington consensus and how they view China at the present moment.
Xu Xiang, what are you hearing in China about these measures that have been proposed by the Biden administration?
Well, I'll give you a little story. In the several days, there are several international companies are consulting me about how they can, gradually and profitably probably, and leave their China company by selling them out or by merging them into some other companies. But on the contrary, some other international companies also are discussing with me how they can, as you just mentioned, move into China gradually and safely with a profit into China. So yes, I do say Biden's policies are creating some turbulence in Chinese market right now. Many companies are considering not the market risks, operation risks, but the political risks working in China. But other companies are seeing this as an opportunity. They have their own considerations. So recently, I think people thinking in China, especially international players in China, are very, very different. I think after the whole fog are going away, people will see a clearer picture about whether they should work in China or not. But still, I would like to mention, just take a look at the Chinese number. Export and import, the trade surplus is still going up. And also the GDP, despite we have the property market issues, despite we have some international trade frictions, but still the GDP growth is still in a positive range. And take a look at the whole world. How many countries manage to do that? So I think there's still a reason to work in China, still develop with the keep on growing middle income class in China. And the newly grown income and the newly grown GDP still can be the combination of all the economic tigers recently. So I think you still can find reasons.
And Xu Xiang, the United States Commerce Secretary, Gina Raimondo, she's planning a trip to Beijing in August. If that does go through, then it will be the fourth such trip to China by high-ranking Biden officials. It was what I was talking about earlier on, these seemingly contradictory policies. I mean, what's behind these high-profile visits? And I'm afraid I've only got about 30 seconds left.
Oh, yes. I think, in short, both sides have the good willingness to work with each other still. But in America, I think certain political factors are still uncontrollable, which managed to, interfering White House's policymaking.
Right. Okay, we have to leave it there. Thank you to all of you for being with us. That is it for this edition of The Heat. I'm Anand Naidu in Washington, D.C. Have a good weekend.